You know when you look at a financial chart and it just looks like a bunch of random squiggly lines? Well, what if I told you that hidden inside those charts is a secret language, a story of a battle, of victory and defeat that's being told every single second in markets all over the world? Today, we're going to learn how to read it, and our journey starts with one very simple shape. So, it really all comes down to this one question. Can a tiny little shape, basically a rectangle with a couple of lines, actually tell you the story of a battle? The answer is absolutely yes. These shapes are called candlesticks, and every single one is a snapshot of an epic fight between buyers and sellers. Okay, so take a look here. On the left, you've got your standard line chart. Pretty basic, right? It just shows you that the price went from point A to point B. But now, look at the chart on the right. It's showing the exact same period. It doesn't just tell you where the price went, it tells you how it got there. You can see the drama, the struggle between the buyers and the sellers. And this amazing visual language, it wasn't invented on Wall Street. Its roots are deep in 18th century Japan.
To really understand these candles, we has to kind of jump in a time machine and go all the way back to the crazy, bustling rice markets of feudal Japan. This isn't just a lesson about charts. It's a story about samurais, merchants, and a truly revolutionary idea.
So, back in the 1700s, rice was literally everything in Japan. It was money, it was power, it was the whole shebang. Eventually, the Dojima Rice Exchange was set up and it became the world's very first futures market. Basically, merchants were trading promises for rice that hadn't even been harvested yet. As you can imagine, the prices were all over the place, totally chaotic. They needed a better system, and that's when our hero enters the story. His name was Munehisa Homa. He was a rice merchant, and he was about to change the world of finance forever. People didn't just say he was a good trader, they called him the god of markets. Why? Because he created a system that was so powerful, so insightful, that it made him an absolute fortune. And I am not kidding when I say a fortune. It's estimated that through his methods, the same methods that gave us candlestick charts, Homa made the equivalent of over $10 billion in today's money. So what was the big secret? Well, here it is. This was the game changer. Homa realized that price isn't just driven by supply and demand. It's driven by human emotion, by fear, and by greed. This quote from his book says it all. Now, bearish is just a fancy word for when everyone is pessimistic and expects prices to fall. Homa understood that when everyone is panicking and selling, that's often the exact moment things are about to turn around. So, he invented candlesticks to actually see that emotion on a chart. All right, so we know the history, the why. Now let's get into the how. It all starts with breaking down what a single candle is actually made of. Every single one of these candles, no matter how big or small, tells you 4 key things about a specific period of time, whether it's 1 minute, 1 hour, or 1 day. It tells you the price when it opened, the highest price it hit, the lowest price it hit, and the price where it finally closed. Just remember, OHLC. Now, the way it shows you this is just brilliant. That thick, chunky part is called the body. Think of that as the main tug of war, showing you the distance between where the price started and where it ended. And those thin lines you see sticking out, those are called wicks or shadows. They show you the extremes of the fight, the highest high and the lowest low the price was pushed to during that session. And the colors? The colors tell you who won the battle. It's incredibly simple. If the candle's green, it means the price closed higher than it opened. The buyers, or the bulls, were in control. They're called bulls because a bull thrusts its horns up. If the candle's red, it means the sellers, or the bears, won that round. You know, like a bear swiping its paws down. So green is up, red is down. Simple, but so powerful. Okay, so we've basically learned the alphabet of this new language. Now let's learn a few words. See, when you put these individual candles together, they start to form patterns. And these patterns can give you some serious clues about where the market might go next. Let's look at a couple of the most common ones. First up, this is a doji. See how the body is just a tiny little sliver, almost a flat line? That's because the opening and closing prices were pretty much exactly the same. The battle for that period was basically a tie, a total stalemate. Neither the buyers nor the sellers could win. A doji is a huge sign of indecision, and it often pops up right before a market trend changes direction. Now this pattern, this one tells a story of an epic comeback. It's called a hammer. Check out that long lower wick. That tells you that, for a while, the sellers were in complete control. They pushed the price way, way down. But then, plot twist, the buyers staged a massive counterattack. They fought all the way back up and managed to close near the top. They literally hammered out a bottom for the price. It's a really positive signal that buyers are stepping back in. So, a tool invented 300 years ago for trading rice in Japan. Why on earth is it the most popular way for traders to look at charts on their fancy, high-tech screens today? Let's get into it. Well, before candlesticks really took over, most traders used something called a bar chart. And if you look here, you'll see they both show the exact same data, the open, high, low, and close. But the difference is all in the design. The candlestick's thick, colored body makes the story of what happened in that time period instantly visible. It's just so much more intuitive. So really, it all boils down to this. This is why they've stood the test of time. First, the visualization is just plain easier. Green means up, red means down. You get it in a split second. Second, they make spotting those patterns we talked about, like the doji and the hammer, way, way simpler. And most importantly, they give you a direct window into the market's psychology. You're not just looking at prices, you're seeing the fight unfold in real time. So the next time you look at a financial chart, don't just see lines and colors. Look for the stories. Look for the battles, the moments of indecision, those incredible comebacks. The secret language that Munehi Sahoma figured out hundreds of years ago is now yours to read. So the only question left is, what stories will you see?